What's going on, traders? Welcome to my stream. Today's Wednesday, and we actually got pretty situated here in a short squeeze today. Pretty interesting short squeeze. Like I recommend shorting. Shorting these tickers is very difficult because you have to study and you have to have a lot of data. Anyway, I'll walk you through like what kind of trades I did today, but you know, somebody in the chat room said to short a ticker, and I looked at it, I'm like, well, it's up a lot, and it's a good idea to short it, but just because it's up a lot doesn't mean it's a good short. So I started short, and then I pretty much just worked my way out of how everything happened. So it was more like, if I had to, you have to guess it, I went short, I lost, and then I went long, I gained on another ticker. So let me just walk you through like how my day went. As you know, I trade every single day from around 7 a.m. till about I don't know, 10:30, and right now is around 10:30. So you can see my P&L. We're gonna walk you through my P&L here. Trying to walk you through. Hold on one second. We're just gonna grab it real quick. Today is the 25th. 24th. Crap. Where is the 25th? I'm sorry. There's the 25th. Save image. There's the image. Oh my God, I got way too much data here. Um, the 6th, 25th, 25. So today is June. There you go. So this is kind of like how I ended up the day today, and I'll explain every single ticker and every single ticker. So let's start with the easy tickers, right? The easy tickers in the morning were obviously. Let's see. I can make a reel out of this. Well, let's see. We can maybe I can make a reel out of this. So you can see that I traded PSTV. PSTV was a ticker that popped into our radar. The ticker actually popped up over here, and then pretty much I took it. We had some traders coming in at 30, sold at 36, and that's cool. We had the first 1 minute to make a new high. Third time a charm. Right about here at 34, I took it long, tried to make some money. So it was a very big chop. I eventually made some money. I didn't make that much money. It was like the smallest gainer. So in M, pretty simple. We pop up. We have a wedge breakout of 180. I buy 180, sold 195. Okay, 10%. I got it. Okay, that's a good trade. GCTK. GCTK was the coolest winner of the day. Actually, what I do is each morning I wake up, I look at my pre-market scanner, and then everything that hits my pre-market scanner, I put it on a separate screen. So GCTK, as you can see, we pop up, we come down, we pop up, we come down, and right here, this is what I called a wedge pattern when a stock broke that wedge. So I didn't really buy it at 950, but I did buy it on the dip. So I was trying to buy at 950 and then risk off $9. It was ideally what happened. Then I saw this big pop over here, and then I pretty much bought the dip because I looked at the daily and I was like, oh, this is a good daily. Look at the daily right here. The daily was pretty good because we broke like $10, and then the daily looked like 11, 12, 14, or actually actually hit a high of 16. So I bought the dip at 1050 and I sold it at 13. So I made a 20% gain. I was very happy with this trade. This trade was killer trade. Now, and then you can see so that SRFM, I have a gain. So we have talked about actually Ollie, I have a loss. Actually, I was buying it right here. It doesn't always work. First 1 minute to make a new high. I buy it here, and then I actually didn't hold my stop at all, and then I ended up chasing it. So let's talk about the two tickers that I was stuck in somewhat of a short squeeze. The two tickers were NKTR. You can see that yesterday we were watching NKTR, and traders in the chat room said that, hey, this is a short. And I was like, well, it was not really a short at all. I don't know if you've seen how to short stocks on day 2. The stock needs to be it needs to be of opening up red on the day. As you can see, so here, let's draw. Let's erase this. Let's draw yesterday's close. Yesterday's close is 24.45. You can see so in this image that nowhere the stock was in the pre-market. Most of the pre-market needs to be red on the day. Needs to open red on the day. It needs to be red most of the pre-market. You can see so here we were red for about an hour or through 2 hours, and then mostly till about 9:30 we were green. So there was no reason. So the stock is opening up green. So there's no reason to short it. I don't know. I got the idea to short because just because you think just because it's up from $9 to $25 does not make it a good short. The ideal scenario, how you should be trading this. Say a stock goes to infinity. Let's do the educational content. Say a stock has a candle like this. Let's a candle like this. Candle like this and a candle like this. So one day, trying to see if I can. Okay. So so we have a big move, right? This is the big move. So this is the big move from here to here, right? That's the candle. So now we draw yesterday's high, right? Right here, the daily. This is the daily, right? This is kind of like the daily. So now we match the daily right here. So this is a level. I don't know. Let's call it the Z level. The Z level right here. This is the level of the Z. For you to go short, day 2 short, day 2 short. For you to go short this ticker, the stock needs to be in the pre-market, say 4 a.m. To about 9 a.m., 9:30. The stock needs to be somewhere here. I don't know. It's kind of like moving around, blah, 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 blah. This is a normal pattern in the pre-market. Maybe it does this, maybe it does that, maybe it does something like this, maybe it does that. And your strategy here is to go short, to go short somewhere off this line, somewhere as close as you can towards yesterday's close, the Z number, and then this would be your risk. You go short, you go short here, and then this is your stop loss. This is your stop. As soon as the stock goes above this Z area, this is your risk. So this would be your stop loss. This is be your stop. But as you can see, so here, you short it somewhere. Let's see. Let's call it. I don't know. Let's short it. You short it somewhere here, and then you cover somewhere over here. Normally, if you're right, if this would be the right time to short it, if you were right, you could have an average dump of 26.4%. That's how much these day 2 shorts work. So 26.4%. That's the average percent. So say you get as close as possible to your Z area, you will make a total of 26.4%. And you will risk, I don't know, this much X. This is your risk. This is your risk. But as you can see, if we compare this side by side with this ticker, this ticker was nowhere near red. You see, was this ticker at all red this whole day? No, this ticker was never red. This ticker was never a day 2 short. Actually, it broke. It had this downtrend right here. Tell you the truth, and then it broke. This is kind of a breakout right here. This is nowhere near a short. This is a breakout of a trend line. This is actually a long. You see so? You see the yellow line. The only time you should go short on day 2 is when you're below yesterday's close. So the trader in the chat room said that this is a good short and it's a good idea to short. And I was like, sure, I guess. I was just going with the flow, I guess. It was not. I was just this. I was looking at it. And I was like, yeah, you're right. It's up a lot. I mean, it's up from $10 to $24, but it doesn't mean it cannot go any higher. As soon as you see that this trend line is breaking, you got to cut your losses. I got to save that. Day 2 short. This is what 90% of the data says right here. This is the 90% of the data. So in this scenario here, the stock was only a little bit red. So say you did go short here at 24, your max risk should be $1. 24 to $1. This would be your risk level. Or you go say short 24, you see it go green, you cover. This would be your risk. Short at 24, cover at 28. But as you can see, so here, for this pattern to work the best, the stock needs to be most of the time below yesterday's close. That's the thing I'm trying to say. Has to be below yesterday's close. And in this situation, it was not. So right here, it would have been a good long, because look at this spike. We spiked up and it was a day 2 continuation the whole time. I actually lost on this ticker because I was initially short and then I didn't cover my short and then I actually made money long. It's just it needs to be. This is the normal pattern. Like there's no reason to go short this ticker. I kind of got with the flow of the chat, because the chat was like, oh, this stock is up too much, it just cannot go any higher, because we were watching it yesterday. But it can't. Just because you don't think it can't go any higher, it can. This is the normal pattern. Before 9:30, it's below yesterday's close. In this scenario, it was almost never, in the pre-market, it was just a little bit underneath yesterday's close and then immediately reclaimed. So this looks like a trend line breakout. And soon enough, this is a day 2 continuation. So what you want to do is, what you want to do, if you were perfect, you need to go cover your short if you messed up and go long. And that's a lot of problems for traders to do. I didn't go long on this ticker. I actually went long on another ticker. You can see so here that the other ticker that I made 20% was RSFM right here. So this ticker, I was watching it right here. You can see, so this is another example of of a stock that you should never short. You can short it, but you need to cover and go long in case that flips. In this situation, this pattern here is more of a short yesterday's high. That's what it is. But we didn't break it the first time. We actually broke it the second time. So you need to understand. Like, so I was watching SRFM in the morning. Obviously, see what happened. I was watching SRFM, and my initial reaction was like, "Yo, this is a day 2 continuation. I'm gonna take it long as it breaks 640." But it already traveled $1 from 360 up to 460. It already traveled $1, a whole dollar. So that's a lot of dollars. So from 360 in the pre-market to 460, it traveled a whole dollar. So I was like, okay, if the price action, once we got to this level, I actually initially bought it at 460 and I got flushed. So when I saw this, I was like, this is a short yesterday's high. But if it breaks yesterday high, it's a long. You see what I'm saying here? So you need to draw out yesterday's high, because if it breaks yesterday high, that's a day two continuation. But it has traveled so much that it needed a pullback. So initially I did go short 450. I had a nice profit right here. You can see the nice profit. It dumped all the way to 411 in the open. And I had, I don't know, a 40-cent profit on 2,000 shares. And then what I did was, when I saw the stock breaking yesterday's high in this candle here, I flipped long. And a lot of people are scared. I was like, should I really flip long? I'm like, well, yeah. It broke the pre-market highs, which was over here, and it broke yesterday's high over here, and it also broke opening range breakout. This is 4 setups in one. Can you see the setups? So these are 4 setups into one. So it's like some people were just looking at it and staring at it, and they were like, didn't really understand. So we have a stock, going up. This is the candle going up. Let me just draw. This is the candle. This is another candle. So there we go. So this was the high. This was the high, and this was the high. So now you take that and you apply it to the intraday. It's very, very, very simple. You guys are not understanding how simple this is. This is yesterday's high on an intraday. We pop up to yesterday's high. We go down. You got it, right? We move around, right? And then we pop up in the morning. We hit resistance. This would be, as you can see. So here, you can see the yellow line. This is yesterday's close. You see? So we did something like this. We popped up to yesterday's high. We dipped. We came back, and then we closed. Then in the pre-market, we popped up to yesterday's high. I thought in this situation is going to be a day two continuation. Let me see, 7 a.m. 7 a.m. I thought in this situation is going to be a day two continuation right here, but it's not. But it's not, because it traveled this much. It traveled this much, which was the dollar. That's a huge amount of dollars, and it didn't have news. So if it had news, this would have worked out. It consolidated a bit. I saw the price action. I was like, nah, it cannot go. So it traveled this amount, and then what it did was it dipped. Say we dip over here, we dipped back down here, and then we had a multiple breakout. This is a wedge pattern. You see this? This is a wedge pattern. So you have applied multiple setups. Yesterday's high. The more things the more things you can align together on a chart, the more participants you're going to get. Yesterday's high, the pre-market high, the opening range breakout. You have 3 tickers. Yesterday high, which is here, the pre-market high, which is here. So when these things happen at the same time, you need to buy it. And obviously, a lot of people were just staring at it, and didn't know what the fuck to do. This is opening range. I don't know. Should I do another color? This is opening range breakout. So you have 3 setups. 3 setups at the same time equals a big explosion. You see? So this was the explosion. The explosion was from here, 4.6 to 5.6, which I recommend most of the time to take 20% profit. You see, you have a wedge pattern. That was a day 2 continuation. So initially I started short over here, then I covered, and then I went long, and then I made 20%. This is a typical example of a day 2 continuation. I wish it could have been better, but it is not. I wish this setup could have been a little bit better. Yeah, I wish this setup could have been better. But if you compare this side by side with this, it was textbook. This is a textbook setup right here. You see that? We have a somewhat of a wedge. Right here is the wedge. Right here is the breakout. And right here is the pop from 460 to 560. This is identical to this. This is very basic. And a lot of people are having trouble. Like, was I supposed to short it? Well, based on the price action, we hit the pre-market high and we traveled $1. That was a big deal. So you should go short. But if it comes back to where you have shorted it, you should pretty much go long. A lot of people cannot really comprehend that. To go long on a stock you were short. And right here, what we were doing yesterday, this is a typical day 2 continuation. This is a bad example of a day 2 continuation, but it's a very nice day 2 continuation. There was no reason for you to short. For you to short this setup, it requires you, to do what to pretty much have it in the pre-market, just chop around over here, and then you pretty much risk it off the high, and then same thing. This would be a day 2 short if it was over here. So you need day 2 short. So if it was here in the pre-market, that's a day 2 short. But if it was over yesterday's high and over yesterday's close and testing yesterday's high, that's a day 2 continuation. I mean, initially I didn't think it's going to keep going as a day 2 continuation. Initially I thought we're just going to reject yesterday's high and fall off a cliff. But that is a day 2 continuation. Did I profit from it? Yeah, I didn't lose any money. I was short at 450, 2,000 shares. I covered back up to 450. I went long at 450 and I made $1 back. It was just I lost 10 cents and I made $1 back. But in this situation, this is where the mind screw is. You guys are not seeing the mind screw. The mind screw is right here. The mind screw is in this ticker NKTR. NKTR was quite difficult because a lot of traders think that let me put that day 2 continuation. A lot of traders think that this setup is a short. We were never. Let me open up real quick. This is an example of a day 2 short. We pop up, we test pre-market highs, we test yesterday's close. This is yesterday's close. This is yesterday's close. We test yesterday's close. This is the only time you should go short the stock. If in the pre-market you were red, you shouldn't go short when in the pre-market the price action of this ticker is pretty much green. You see what they did here? What is this? A short trap. They took it red and immediately recovered. So how to not get caught in that short squeeze? You need to have the risk. This is your risk right here. This is your risk. This is your risk right here. It goes red. And then if it doesn't hold red, you need to cover as soon as it goes green. So in this situation, say you didn't know that the majority of the pre-market price action needs to be below yesterday's close. Say you go short because it went red, you need to cover as soon as it's green. Because just because you don't think it cannot go any higher, it can't. What happened was I actually lost on this ticker. I don't know what happened. My bias was to go long, was to go short. Besides the fact that my data here said that I should have never shorted it. I don't know. I got carried away with the chat because some traders are right on some opinions. They have great opinions, but they have hard time implementing. And today his opinion was wrong. So in this scenario, you need to pretty much go long. Like right here, we broke pre-market highs. Right here at 28. Right here, we broke the downtrend. This is also a day two continuation. You can see so here. This is a day two continuation as well. We have two day two continuation. Let's see. Let's draw this thing out. Right here. This is a day two continuation. Let's examine this chart because you're not understanding it. We have a stock, another stock, right? This is the stock. So I don't know. It went to a high, whatever the high was. Then you draw some lines. Yesterday's close and yesterday's close, right? Yesterday's high, right? So the stock, and then at 7 a.m. what happened? Then you draw your lines, right? These are your lines. So yesterday's close is right here. You can see so that the majority of the time in this scenario, we were above yesterday's close. We were over here a bit. So this is no reason to short it because you don't have anywhere to base your risk off. Yesterday's close. You have nowhere to base your risk, you see? Day two continuation. This is the pre-market price action. And you can see so here that we have a high going up here, right? This is yesterday's high. We pop up over here, we sell off. We're gonna draw right here. You draw it real quick. We have yesterday's close. So yesterday's close, right? And then hold on. That's yesterday's close. And then so we pop up to yesterday high right here. Yesterday's high. Yesterday high. Okay, so we go to the yesterday's high, we pop up. We hold yesterday's close. This is the price action that happened here. And now we kind of wiggle right here. We kind of wiggled a bit here. We went a little bit red, but immediately we got saved. And then the majority of the pre-market action was pretty much above yesterday's close. So there's no reason to short it because you don't have anywhere to base your risk off. You see, 7 a.m. The majority of the time, you don't have anywhere to base it off. 4 a.m. There's a big difference between a day two short and a day two continuation. There was no reason to short it because right here we had a big wedge pattern right here. After we had this dump, it tried to go red a bit, and then immediately got picked back up. So if you went short here, this would be your stop, and then the stock pretty much had a breakout. This is a day two continuation. It went from 26 to 30, 34. 26 to 34, which is insane. In just, I don't know how much. You see, we had multiple things going on here. We had A, pre-market breakout, right? B, opening range breakout, right? Pre-market breakout. This yellow line, right? That's the pre-market breakout. Opening range breakout. That means we opened at 26 and then we reclaimed. And then we also had a trend line breakout. So you had three things combined here to go long. And a lot of traders didn't really understand that. They're like, it's a day too short. It's not. You need to cover and you need to go long. I actually didn't cover to go long, but I did cover and I did go long on the other one. Because you can see that, I took my loss, I made some back, whatever. But you need to cover, like the ones that I did cover and I went long was pretty much SRFM. I did cover because I was short the yesterday's high and it dumped. It was a good short. And then it came back to yesterday's high and I had to cover it and I went long. So I did go long on that one. But in this situation, which is this ticker, NKTR, you need to buy it because you had three things happening right here. You had an opening range breakout right here in this spot. You had an opening range breakout, you had a trend line breakout, and then right here you had a yesterday's high day two continuation breakout. And look how high the freaking thing went. 35, 28 to 35. So this is a really good example how I got caught in a short squeeze and flipped long. Actually, I actually bought some 30 dip right here. You can see that my last trade I bought the 30 VWAP bounce. So, this is a really good example here how I got caught short and then I flipped long. I got caught short and then I flipped long. This is don't let them fool you of these setups because they need both of them were day two continuation. These stocks were never red in the pre-market. They were never red in the pre-market. Actually, I'm wearing my red shirt. Maybe that's why I lost. I should not lost on one ticker. But in this situation, you should have just went long, covered your short if you were dumb enough to short it, and go freaking long. Because right here at 28.5, you had another setup going for it. You had a 52-week breakout. So look how many things just aligned with you. You can see, so here on the daily, 28.91 is also 20. The more participants you get, the better the breakouts get. More things you can align together. Opening range breakout, trend line breakout, pre-market breakout, 52-week breakout. The more things you can align together, the better the breakout is. Just because it went higher doesn't mean it cannot go any higher. Look at that. It's $35. $35. Unbelievable. So this is how I got caught in a short and flip long. This is a really good example how I got caught in a short and flip long. Because initially I got caught in this short and then I eventually flipped long after I took my loss. But I should have done it a little bit sooner. A lot of traders did it a little bit sooner. But the one that I did, flip short was SRFM. That thing I flipped immediately long because I recognize that this is, yesterday's high breakout, pre-market breakout, opening range breakout, trend line breakout. What more do you want? And in this situation, NKTR, you had a trend line breakout, you have an opening range breakout, you have a pre-market breakout, you have a yesterday's high breakout, and a 52-week breakout. I gotta take a screenshot of this because this is a good this is a really good thumbnail right here. Let's see, smile. There we go. There we go. right here. There we go. I'm smiling, all right? That's my thumbnail. All right, so that's it, guys. Hope you guys enjoyed this video. Make sure you give this video a thumb. Hope you guys learned something. This was key GWiz information. How to not confuse a day too short to a day two continuation. Like I said, results. My results are not typical and blah 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 blah. All that disclaimer. Read it.